Hey guys, your guy JD here. Um, let's just get down to it. Okay. So there's a lot of things which we are gonna be expecting to see throughout this coming week on the market. So we're gonna start with the weekly bias here. So what do I think when I look at the market on a weekly perspective? For me, the market is still pretty much bullish. The fact that we didn't close bearish for me is still giving me a bullish momentum or a bullish continuation. At this point, I still believe that this market is gonna be bullish going on forward. Okay. Reason being, those who understand they will see that now we are just looking at the market from the high and the low. Okay, so this market happened to, we have the 61% of the Fibonacci here, and then we have the 71% maybe down here. But this market did actually tap into both uh, Fibonacci levels before it reverses and come and break this resistance, but failed to close above and then come and close down here, which I guess there was still some business that we need to clear down here for us to head all the way up to the all-time high. Okay, so as you can see, guys, the all-time high is something that you can't see here. Okay, it's a good supply level. The reason why you can't see it is because I choose to eliminate the wicks whenever I'm analyzing. Okay, I love to analyze my market based on candlestick breaks because those are not fake outs, those are actually clear breaks. Okay, so when you are looking at the wicks like this, guys, there are a lot of orders here on the wicks. Okay, the market always leaves a lot of orders on the wicks. So if we happen to start by dipping this week, there's a high possibility that we are just coming for the orders which are there. Okay, we might just come for orders which are resting here on the week of this candlestick here. Okay, and if we were to go to the daily time frame also, let's get to this daily time frame. I'm gonna switch off the weeks again and then look at the market without the wicks. Okay, so now we can tell. Okay, now we can tell that the possibility might be that you see that we had this huge gap here, and I do appreciate it when the market close my gaps using the body of the candlesticks instead of the wicks of the candlesticks, because then I will know that okay, that FVG which is there or that imbalance there was mitigated. Okay, so we tapped on one of my pure eyes on Friday, closed above it, and then that's a potential setup for me there. Okay, there's still a potential move that might come out of that. And also we might just come down all the way to this area here that I highlighted on a weekly time frame, that if we are dipping back into this area here, we're gonna be covering this FVG with the body of the candlestick instead of the wicks of the candlestick, which means that if the market is still pushing down from up here going down to this level here, Monday, Tuesday, then I won't be trading, which means that I'm gonna be taking trades from Wednesday, Thursday, Friday. Okay, which means that I'm only gonna be looking for potential push, which is gonna be happening all the way here, or if a reversal starts showing there. Okay, so it's what I have now on my trading plan here. Okay, if it doesn't match my trading plan, if it's not on my trading plan, then on the chart for me it doesn't exist. I'm not gonna bother myself entertaining that thing. So yeah, let's go down to smaller time frame. I'm gonna go down to 4 hours, and if we are looking into the 4 hours, I have my confluence of bias here. This is where my X setup is intersecting here. So I have a confluence of bias, which is where my first POI and my second POI is at. And as you can see, we managed to close that gap, which was there. Okay, all those imbalances which were there now closed. Okay, which if we also look at the hourly time frame, we can tell that the market is starting to show a reversal pattern now. And if you can see here, you see, I'm not drawing my trends on the wicks, I'm drawing them on the body of the candlesticks, okay? Which makes them very precise most of the time. So we can see up here on the resistance, we push down, and then we break, okay? So my EQ here, my equilibrium point here, where my confluence of buys is. You can see the market deep down tested this area of breaking here, and then we saw a bit of a rejection signs happening there. Okay, we saw a bit of rejection signs happening there. Let me turn on the wicks of the candlesticks to point that out to you. So you can see here, guys, on 1 hour time frame, how this candlestick closed and how the market was descending, coming or approaching this POI here. The volatility, we can see the volatility dying out there. Okay, first it shoot down with more volatility, but we can see here the market was starting to mix with a bit of bullish candlesticks there, which means that the volatility was dying out. Okay, we were no longer having that much of the bearish momentum on the market. Okay, so the volume was dying out. So there's also this thing that I was showed this by someone, which if I can just go like this, if I'm not mistaken, I hope it's gonna work. I hope it's gonna work. Okay, come on, why isn't my volume range working? Okay, I will show you this on smaller time frames. Okay, I'll show this too on the smaller time frames. So from here, approaching this level here, we can see that the volatility was dying out. So now we know that this setup up here, the first 10 here was a bit invalid, which is what I gave you guys on Friday. So I tend to analyze the market on 2 different charts, which is forex.com. So you can see I gave you this one here, which ended up not playing out, and I wasn't mad about it because I was actually expecting to see what happened there. Okay, I was expecting to see gold break below, retest some of these areas before we push up. Okay, after all the scandals that we are having now globally. Okay, you see all this global tension, they are driving us to having things like this on the market. So yeah, on the coming week, guys, I'm gonna be expecting to see some bullish reversal, and then the continuous move to the upside. So let me try to apply my volume range again. I'm just gonna apply it from here to here. Okay, still not working. I don't know why this volume profile is not working. So I will do another separate video on it and how to use it. Okay. But going out throughout this week, guys, you can see all these rejections, which is signaling a potential reversal on the market. Okay. Although we can still wait for the market to dip down to this area here, which is gonna be 32.90, 32.95, and then we look for a reversal there. Okay. But if the reversal do happen to come out here, it means that we're gonna be looking for some kind of, as you can see, this 1 hour here, we're gonna be looking for a candle which is gonna engulf. Okay, we're gonna be looking for something like an engulfing candlestick, which means that we're gonna be looking for a candlestick which is gonna push maybe up like that. Okay, let me change the fill. We're gonna look for a candlestick which might push up like that, and then followed by a retesting candlestick. Okay, then it's going to be followed by a retesting candlestick, which might be retesting all the way back here. And then that's where we're going to be looking to take our buys from on the retest. And then we're going to target our first target is going to be this area that we broke here. That's going to be our first target. But if we happen to build enough momentum to break above it, and then we go and start looking for a retest. After breaking it, we get a retest on it. Then on the retest, that's when we can see now we are scaling in more positions to the upside, which means that if we're scaling more positions, we're gonna be looking for more things like a continuous momentum up, just like that, which means that now you have your buying chance moving continuously to the upside. So this is what I'm going to be expecting going throughout the following week that we're going to from the 9th of June. Okay, I will see you on my next video, guys. I'm out.